All right. Well, guys, if you have questions for Matthew, go ahead and raise your hand digitally because I won't be able to see you. Raise your hand digitally, and I'll call on you to unmute yourself to ask Matthew any question you want.
I love it, man. And I put a link for our deal that we have right now. But yeah, please, any questions, opinions, even advice. I'm all ears here, man.
Let's wow. Okay, Dennis, go ahead, unmute.
Matt, in the current condition, um, with with people anticipating the window closing soon, do you see people overpaying still for multifamily properties right now? Getting too aggressive, winning that deal?
That's a good question. What I've seen in San Antonio is very few buyers, like not many at all. The deals that I'm doing are mostly loan assumptions, and so they're very little equity required to buy these deals, and then they cash flow immediately. The biggest thing that I'm seeing is people thinking they can close these deals and then them not. So they go under contract and then they can't raise the capital. Could you buy these deals cheaper? Maybe a little, but in my opinion, not that much. Like we're buying deals for 70, 80, 90K a door, and that's hard to beat. You're not going to get to 60 or 50, right? And so like that's that window where if you wait to time it, it's probably going to be too late in my opinion. So it just comes down to the fundamentals. Like as long as they cash flow and you're being conservative right now, that's what you have to focus on versus trying to buy this cheaper than anybody did or will in the next 10 years. Like that's really hard to do. So we're just saying we got a cash flow 7 to 9% immediately, conservatively, and then we've got to be able to we pay out monthly to all of our
You're
investors.
you're looking for bank distressed properties.
Yeah, so like assets that are doing well, but and you get this because you're in the space, but like 5 year balloon payments are here, right?
Hmm.
So they're, for example, one of the deals we're buying for 39 million, the owner bought for 46. So the debt's due. So he could try to refinance it and he's gonna have to bring $2 or $3 million to the table, but he's still gonna be locked in at that price that's too high. So it doesn't make sense to do that, right? And so that's
Right.
where we can come in and bring fresh equity and steal the deal, really steal it. And then we can wait, the 5 to 10 years to sell it.
I sent you my contact information, Matt. Let's hook up and meet in Waco sometime in the next little bit. Okay.
I'd love to. You texted it to me or
I
something?
did. Well, I chat. It's in the chat.
Okay. Can you, if you don't
I'll
mind?
text it to you. I'll
Thank
text
you.
it to you. Yes, sir.
Thank you, man.
Thank you for your time, Matt. Appreciate your comments
I love
today.
the Waco market too.
Yeah, I do too. I'm crushing it down there.
Cole, go ahead.
Hey, Matt, thanks for the time. Appreciate hearing from you. From the DFW area myself, and I'm with Triad Assets, and we do a lot of land development. So, can you maybe speak into land development on the multifamily side and kind of what you're seeing primarily in the Texas market? And then, if you're able to throw in somewhere into that response, the general market in terms of workforce housing, what we have kind of with the baby boomer generation, kind of coming out of that versus current market and generation. So yeah, a lot of questions there, but just would love to hear your thoughts on that.
I love it. Yeah, and Tim, I mean, please jump in here too if you want. But one of the things that I'm seeing is, these Class A apartments that are like 2,400, 2,600. Those are becoming harder for people to afford, and so it's putting pressure on B and C rents. So like we're getting higher rents than we anticipated on our B properties, like $200-300 bumps with little to no renovations. So these are like $1,100, $1,200 rents. So as far as like workforce and affordability, I think those rents are gonna be strong. the Class A, I don't see as much because people are making less money and it's harder for them to afford that. Development in Austin and San Antonio has slowed a lot. There was oversupply for sure, but that's in 1 year, like we're going to be undersupplied again. So that's what I'm seeing there. I'm not a developer. Um, I respect developers. I think developers are like the ultimate real estate entrepreneurs. I've been around it, and there's so many challenges, man. But that's why you make the big bucks on those deals. But that's my take, Tim. If you have any thoughts on that, I think it'd be good for you to share as well.
Yeah, I mean, um, I don't do much development either, but I do deal with operators that we partner with that have, class A type assets as well. I think in general, the Texas market with the population growth that we'll be experiencing will still continue to grow pretty rapidly, and supply, I think, kind of peaked out last year, and it seems like all major markets in Texas have gotten good amount of absorption, and so yeah, so this 2025 here, 2026, yeah, I do see pretty strong growth. Uh, I'm get ready to raise for a Class A in North Lake, Texas, which is what, north of Fort Worth there. And look at the report. I mean, yeah, it looks like it's stabilizing and coming into a good uh strong market, and so yeah, so I do I do see a lot of good stuff coming for Texas in general. But yeah, Houston, Dallas, I mean, here in Houston, so Houston, Dallas, San Antonio, Austin would be like my fourth there on that list, but yeah.
Awesome. Yeah, I appreciate it. Yeah, we focus primarily in tertiary markets, so kind of west, northwest of Fort Worth, and kind of where we're seeing some growth out there, and really trying to tap into maybe trying to build workforce housing, like you guys are saying, not primarily focused on that A class asset. So maybe coming in with some Formica countertops instead of granite, or doing a steel building versus brick and mortar, that kind of thing. So yeah, I appreciate y'all's time. Thanks for the insight.
Yeah,
Sounds
man.
good,
We
Cole.
got to a
Thanks.
good mustache, by the way.
All right, Masood, go ahead.
Hi there, Matthew. Thanks a lot. So my question is, as I've been working on a lot with capital raising and investor management with the AI automation and all the other side. So considering the current competition that we have with the market, what mediums and strategies should be used for raising capitals for, let's say, a property under 50 to 80 units for now at the medium? What can be the mediums or strategy that you should suggest from your side?
Man, it's to me, it's simple. It's people. It's just people, dude. Like, so, have you raised capital before?
Yeah, I did raise capital for some of my other clients. So this is like a new property that I'm trying to raise capital for. So I need some new age strategy if that's really a better one to go for.
Yeah, but like just be building, right? Like,
Mhm.
do a weekly class or weekly webinar or monthly, constantly inviting people to them. There's probably local meetups where you're at. Go to those. Come up
Mhm.
with your story. You can come pitch it on my class, right? Like I've got 150 people that come, and you're welcome to pitch it there.
Mm.
And so
Sure,
like,
that's great to know.
yeah. So like, just people, man. Like you got to be, if you're serious about it, you got to be talking to 20 to 50 people a day, new people. And then you got to be staying in touch with them.
Got it. Thanks a lot, Matthew.
You got it, man.
Okay, Vanessa, go ahead, unmute.
Thank you so much, first and foremost. Thank you so much for all of the value you provided today. And thank you so much to Mr. Mai for putting this together. I wanted to ask you if you had any writer or specific book recommendations, specifically in two areas. One of them, business overall and entrepreneurship. Like you said, at the end of the day, all of this is business. And second of all, like just life in general slash mindset, because I do think that's really important. And I really appreciated all of the insights that you gave on that aspect of things. So yeah, that's kind of the question. Thank you.
Yeah, can you? I'm gonna post something in here that I think everybody will like. Tim, you've probably seen this before,
Mhm.
but it's a capital raising PDF by this guy Richard Wilson. Check that out if you can. Vanessa, if you don't mind, I got sidetracked when you asked for something. I put that in there, but can you ask the question one more time?
Yeah, for sure. Thank you so much. First and foremost, thank you so much for that resource. That's amazing. Thank you so much. I wanted to ask you for recommendations of either specific writers or specific books on two categories. One of them like business overall slash entrepreneurship, and another category like just life in general slash mindset, because I think you provided a lot of really valuable advice on that side as
Yeah.
well.
So the PDF is there. I'll tell you guys my personal favorite books for real estate. One is called Trammell Crow Builder. Trammell Crow Master Builder. The other one is called William Zeckendorf. It's the story of the man who played real life Monopoly and won.
Mm.
And then the other one is Hunting in a Farmer's World. Those are books that really resonated with me. And then for personal, it's just really as much as I can hammer on this, like I really believe in God and Jesus, and I really believe that um, people matter, right? And like there's a lot of people that are like, there's partnerships are bad, right? And I'm like, yeah, everybody's had a bad partnership, but like where are all the bad partners? Because nobody's taking accountability, right? And so like a lot of it comes from like trying to be better ourselves. We've all made mistakes, having forgiveness, not judging, and just believing that everybody I talk to, every person I come across, there's a reason for that. And trying to like for the first part of my career, I was so ambitious and forcing everything into existence. And now I try really hard to like let it happen. Like if I go to a room, like, yeah, do I want to talk to all 1,000 people? Like, absolutely. But like, I have to just like see who looks me in the eye and who do I talk to, and whether they're a big spender or not, I got to value them. And so like really diving into that, I try hard to read the Bible, and I have two little boys married, and I try to count my blessings every day, go swimming with them or run around and not take life too seriously. Because I don't, I'm good at real estate, sure, but like I'm just a guy, and hopefully I can just plant good seeds and make God proud.
Thank you so much again. Thank you so much.
Yeah, thank
Awesome,
you.
Vanessa. Okay, Steve, go ahead and mute.
Hi, Matthew. How are you?
Good, brother. Good to see you.
Good to see you too. All right. I'm working on my webinar. The deal sells itself. The numbers don't lie. But how much do you sell yourself, right? Like any tips on how to like how deep do you go on you tell your backstory, and possibly even if you had some of your links to some of the webinars you did, and that way I can kind of go over them and see some key points. Or do you have any key points for me to go over?
Yeah, I put a link. If you sign up in the link that I have our active deal on, we
Mm-hmm.
actually have our webinar there, and I'd love
Okay.
to watch it. I'd love for everybody to watch it and just see, how we do it, right?
All
But
right.
and Tim, please speak on this too. But I think selling yourself is a huge part of it. At the end of
Okay.
the day, like people want a story, we want something to believe in and somebody to bet on. If we're just looking at spreadsheets, like, let's just go buy Berkshire Hathaway stock, right? But like we're not, right? And so
No.
like we want to resonate with the person. We want to see a bigger picture. I invest in people, like I'm investing with a guy. I don't even really care about the numbers. Like I just want to show him that I'm supporting of him, and I want to be doing
Mhm.
deals with him. So like
That
I do.
me?
That's part of doing deals with you. Yeah, absolutely.
Yeah.
I try to do that with a lot of people. And so your story, your skill set, having the engineer mind, the engineer background, that's a big deal. I think for me at
Hmm.
least, I want
Yeah.
to invest with engineers because you probably don't miss too many things.
Yeah.
So hammering on that, right?
Hmm.
And just being real and being you.
Right on. Perfect. Yep. Sounds good.
That's the beautiful thing, man. Like we get to in this business, we get to create and say what we think and say what we want, and we don't have to worry about our boss firing us. Like, what a blessing is that?
Yeah, exactly. Thank you.
Mm, yeah. And I'll add to that too, Steve, for you. I 100%, sell more on you. And sometimes on a deal webinar, you're mindful of time and people, you don't want people to be on there for so long. Yeah, and so I like to do it as a two-part process. So before I pitch the deal, I'll do a case study webinar, which then in a case study webinar, I get to talk a lot about deals that I have done, which gives me a lot of opportunity to talk about myself and my company and then follow up with I call it a pitch webinar for whatever deal I'm raising money for, and so one comes off as more educational, but they get to learn a lot about me, and then when we're pitching about the deal, we can talk more about the deal because now they've seen they gotten to see both of that. So that's something you might want to consider structuring as well. But yeah, even within your pitch webinar, you should have at least a case study or two within your pitch webinar, so they get to also see. It won't be a full blown case study webinar like the first one that you do or the standalone one that you do, but just a short so they know that oh yeah, Steve has the experience to do similar to deals to the deal that he's pitching for right now.
Thank you.
Mm-hmm. Yep.
Just the reason why I point people to Tim for the fund of funds is like raising capital is so much harder than anybody thinks. I mean, finding a deal is hard. And you can spend a lot of time to find the deal, and then all of a sudden you can't raise the capital. So I really encourage you to just be raising capital all the time, whether it's
Yep.
for your deal or somebody else's deal, to have that flow going because people need to see you doing it for a year before they actually start investing.
Yeah. 100%. Yep. Uh, Ilya.
Oh, Ilya, you got it. Can you hear me?
Yep.
Hey, bro.
Can hear you.
Hey, Matt, how are you? Hello, Tim. Hello, everybody. Hey, quick question for you, Matt. And it was a pleasure meeting you in Arizona, of course, recently. You expressed a pretty confident outlook on a 12-month horizon in terms of what's happening to macro and rates and what the market might do. What is your take on the possibility of these yields are not coming down? They're trying to compress the yield curve and push the rates down. I'm beginning to gravitate towards an opinion that they might not succeed in doing that. So if the yields do not come down and stay here, if not increase, how does that change the outlook for this multifamily market, in your opinion?
Yeah. Well, it's very, as I've said, like my mindset's hyper focused on Austin and San Antonio. So that's what I can speak on the best way possible. One of the deals we're doing right now is 4.32 fixed debt for 6 years. So we got a 6 year window for things to change. That's about as good as you're going to get, in my opinion. Some of the other deals we're buying rate caps for 3 to 5 years. But specifically in Austin and San Antonio, jobs and people are still coming here. Tesla and Samsung announced a $17 billion deal between the two companies like 2 weeks ago. And so when those things are going to continue to happen and continue to occur, real estate in those markets is going to go up and it's going to be sought after and the demand is going to be there and the rents are going to go up. So that's for those markets. If if things don't change, it's just going to open up more and more opportunities from a lot of these sellers that are just barely hanging on. Like, use it as a case study to go and ask people who invested in the last 5 years, whether they did their own deal or they invested, like, how is it going? And it's probably not good. And if they haven't lost it already, if this stays in place for another year or 2 years, then they're definitely going to be losing it for the most part. But when I factor in how we're approaching our deals, locking in for 6 years of debt or 5 years of debt, at some point, could rates double and all these other things? Like, yeah, but like, you can't predict everything, and you have to take a risk at some point. And like, now's that point, in my opinion. So could be wrong, but if you wait, you could be wrong as well. And so I lean towards making sure these deals make sense right now, because when they cash flow now and the debt's locked in, it really doesn't matter what's going to happen until that the debt's coming due or maturing, which is going to be 5 or 6 years on these deals. So that's my take there. Tim, love if you add to that if you want.
Yeah. No, I agree with you. Yeah. And what market did you say you were in?
I'm in the Philadelphia market, but I'm more concerned from a macro perspective. We're talking about this urgency as related to this maybe 12-month window that's coming up. But if the yields do not get suppressed and if the interest rates do not come down, maybe that window might extend. And
It's possible.
as you referenced, that these opportunities will still be available 18 months, 24 months from now.
It's true, but like the way I think about it is, once it becomes very clear that that's like factual, that's when everybody jumps in.
Yeah. Yeah, and that's already happening here in Houston, actually. I talk a lot with Lone Star Capital. They're big here in Houston, Texas in general, but especially in Houston. And they're just now buying their first deal of the year. They have been this year, 2025, they have gotten outbid a number of times from big check writers. These institutional players that's been sitting out for the last couple of years. They're starting to enter the market. And so yeah, so it's, like Matt said, the window is small. Even if interest doesn't go down, the window's still small because these institutional players that's, raise the money, sitting on the sideline, they're ready to deploy that money now. And yeah, so that's the other aspect to it.
And then you're not gonna then you're not gonna get selected by the brokers. Like, they're not gonna go with me. They're gonna go with the big dogs.
Yeah, totally makes sense. Thanks, guys, for the feedback. I appreciate it.
Good
Yeah,
question.
you're very welcome. Monica, go ahead. Unmute.
Tim, it's so good to see you. I just met you last week on a different call. And Matt, awesome that you're on this call. You answered one of my questions, Matt. If I don't have a deal and raising capital, that was my question. Like, how do you raise capital when you don't have a deal? And you said to start raising it for other people's deals. Knowing what you know now, if you were starting over again, like from square one, what size multifamily would you focus on? Like, how many doors?
Well, so to your question on raising, the fund of funds model is such a good model, and Tim can help people with that specifically, and I really recommend it. I would say right now, based on my theory and my thesis, the bigger the better, because it's a small opportunity to pull this off.
And then I would just come to someone like yourself for assistance.
Yeah,
Because
so
obviously,
yeah, like, I mean, I want, if you have brokers to call or deals to look at, like, I want to look at those with you. Like, I really do. I want,
okay.
I'd love if, how many people are here? 73? If 73 people had me on email threads with deals, I'd love it. I won't get overloaded. And then the fund to fund model is like, hey, start pitching deals. That
Yeah.
way, when you have your own deal, you already have a system in place for that. Because a lot of these things
Right.
take time. But yes, I want to partner. I want to do deals. I want to support. And I don't just say this to say it. Like, if anyone's on this call that has heard me say this before and I didn't respond, call me out right now. I care and I want to do deals with people.
Thank you, Matt. I think I caught most of that.
Thank you. Yeah, here to help.
Yeah. And and for those of you who like you've never raised capital before, and one of the things that that I recommend is just doing a practice raise. You can take, any deals, whether the deals has closed already or someone's raising money for that deal right now. Just run that deal by your investors and say, hey, if I was to do a deal like this, is this something you would be interested in? Right? Just like a really soft, you're not raising money officially. It's not even your deal to raise for, but just to run those deals as a case study, through your investors, give you an opportunity to gauge interest. Okay. All right, Matthew. Thank you so much for doing this amazing call and answering everybody's questions here. Real quick, let's give you out your contact information another time for those that didn't catch it the first time. It's the number 3 capital.com, tr3capital.com. And then is your email something simple
Yeah,
like Matt?
at Gmail. And I want to see 71 text messages. Come on, guys.
Nice. Nice.
512-914-4806. Send me something cool. Send me a picture, whatever. Let's build. Let's get it, man. None of this is easy. You gotta, Tim, you know it, man. You gotta get after it. And
Yeah.
if you're sitting on the sidelines or nervous, like, come on, let's get off the sidelines.
Exactly. Great job. Okay. All right. All right, everyone. Let's take a group picture with Matt real quick. Go ahead and turn on your cameras. I'm going to. Okay, yeah. Quick announcement. We have our event coming up on October 2nd to 4th here in Houston, Texas. Yeah, we are expecting a sold out event. And so register as soon as you can. We're about 45 days away. We have a 30% off special going on right now, early bird special. And it's a buy one, give one. So you're able to bring a friend, a partner, a spouse with you as well. So, okay, everyone, get your cameras turned off. All right, Matt, we flex on this show, buddy. We flex for our pictures. You guys ready? I'm gonna count us down. 3, 2, 1. Yay!